What's going on, traders? Andrew O'Connell with Pristine Capital coming at you with yet another market recap video. It is July 16th, 2021. Please go ahead and click the like button on this video and subscribe to my channel if you enjoy this content, and I will continue to make it for you. Today we're going to talk about the price action in the indices. We're going to go under the hood and check out our sectors and style factors. We'll talk about some of my trades for the day. And last but not least, we'll wrap up with options order flow. Before we jump into all that, quick risk disclaimer, nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. And last but certainly not least, do not YOLO your entire account into any one of my trades. All right, let's jump right into it here. And we can see the barbecue continued. So let's check this out. Box scores for today. We had the S&P 500 close down 0.78%. We had the NASDAQ QQQ close down 0.81%. We had the IWM small caps close down 1.23%. And we had the Dow Jones close down 0.86%. So, scenario we had been talking about for the past, really I want to say I've been talking about this for the past 2 weeks really, but once you get extended from the 20-day simple moving average, your risk on entries increases. And really just the more you get extended from any key moving averages, every asset, every stock, every ETF, every futures contract, they all correct back to their key moving averages, and it happens all the time. So check this out. Look at all these pullbacks to the 20-day and then even the 50-day as well. Here we pulled back to the 50-day. Here we pulled back to the 50-day. Here we pulled back to the 50-day. Pull back to the 50, 50, 20, lower than the 50. And here we haven't even pulled back to the 20 yet. So that's why, we were talking about a couple days ago, I started trimming up a lot of my exposure, stopping out of things, taking losses, because, I just knew, hey, I might be taking losses up here. And that's the thing as well, so this is a huge thing. This is a huge nugget right here. So if you find yourself, the market's extended and you're still not crushing it with your exposures, you're man, some of my stocks are down, even though the market is up way big, or man, I'm in some of the wrong areas here, or this is kind of odd, I'm not really crushing it or whatever. That is when you really have to take some trades off, because usually what that means, if the market was ripping and you were not in the correct areas of the market and you're not exactly keeping pace with the market, a lot of people, their natural tendency is I need to add more exposure, I need to put more trades on, that way I can make more money. And that can be the worst thing, because then when the market actually does get weak, that's where your portfolio just gets barbecued. And, then you're oh my gosh, then you're really set back. So a lot of times, I've been talking about this for the past couple of videos, but it really helps just fall on your sword, fold your hand. In most things in life, you want to stick with them through and through to the end. It's in a relationship, you want to make it work, you want to stick it out, in any professional endeavor, whatever it might be. Trading is the opposite. And that's actually kind of liberating about trading, where with trading, if you buy something, you don't have to stick with it. You don't have to marry it. You don't have to, do anything like that. You can just, tuck tail and run at the first sign of trouble. And that's actually, advantageous to do as a trader. So now here we are, S&P 500 down 0.77% for today. Now we're starting to close in on that 20-day. So now I'm actually liking the risk reward a bit better. That being said, hey, maybe this just turns into a massive correction and, we spill down even further. But on a short-term basis, I like the risk reward here better than I did up here. And that's very counterintuitive for people, but yeah, it is what it is. On our hourly chart here, you can see we are closing in on this weekly value area low here at 4308 spot 5. So yeah, this is, we've been talking about it for the past couple days. This is not a conducive environment for being like super aggressive in the market, being fully allocated, that sort of thing for sure. And then NASDAQ. You can see NASDAQ broke below, or excuse me, this is the wrong chart here. NASDAQ trading right below this weekly value area low here. So we actually broke below into the close. And who knows, maybe we have more downside in the NASDAQ. You can see the NASDAQ as well hasn't even tagged the 20-day. So that's really, what I was saying back here, where it's like, if you're feeling any pain or whatever up here, be careful, because, what if we tag this level or that level or whatever? You just want to make sure you're in a good spot. And then Russell down 1.22%. The Russell looks like it's rolling over here. And yeah, like it is rolling over here. And I think the most important thing is here we got an oversold bounce, and then that bounce was sold pretty sharply. We made new lows. We got an oversold bounce here, but we did not even get the same thing that we had the first time where, okay, and then it turns into like a multi-day rally kind of thing. No, this was just, we got an intraday bounce, and that immediately was sold. Because today, another dynamic about today was we gapped higher. So we gapped up, and a lot of these indices were up. I think the Russell was up almost 1% at one point. So yeah, the breadth opened up really nicely, and then we could see a lot of players stepped in and started selling pretty aggressively. So yeah, very tough day. There was still more selling to do. And a lot of times, and this is something I probably should have thought a little bit more about yesterday, but a lot of these really painful, sharp down moves, it just so happens, it's kind of like chance, where a lot of times they do bottom into the weekend, like on a Friday. Like it's actually very rare where like, oh, Thursday was so weak, and then, the market bottoms, and then you just rally Friday. A lot of times Friday is the day where like taps on the shoulder happen. People are like, I just can't do this. Like I'm cleaning things up into the weekend. They get straightened out into the weekend, that sort of thing. So now we're coming into Monday. We're actually very oversold in almost all these assets. So that being said, these are no longer in just like pure uptrends anymore on the shorter term time frames, but we're oversold on those shorter term time frames. So I put on one trade today for a bounce, but I just made sure to size it small. But yeah, so for me, I'm like, okay, I sort of see where we are in the big picture. Things are deteriorating. In the short term, we're very oversold. So I was like, I'll take a stab at something. Well, I really haven't been active for the past couple days, which also is very hard. Not being as active for a trader is very, very difficult. And even for me, like I run a trading community, I know everybody wants to be trading all the time, but I just try to be communicative and like, just say like, I just don't want to trade today. Like, I just don't feel that the odds are in my favor, like that sort of thing. Yeah, and I hope everyone understands that. It's like, the last thing I want to do is, add to someone's drawdown by like throwing on a bunch of additional trades and whatever. I don't want to just trade to trade or anything like that. Dow Jones, you can see, closed down 0.87%. So now trading within value here. And you can see the key moving averages are a little bit lower. So yeah, all these markets, we're definitely entering this period of stress. We've been talking about the past couple of days, the market's weakening up. And I don't know if it has to do with, what's going on with inflation and, inflation just continuing to rip higher. The market thinks the Fed's going to reduce their QE or be forced to reduce their QE, whatever it might be. But yeah, the conditions definitely have been deteriorating quite a bit. Let's take a look at our market breadth here. And yeah, market breadth was negative again. You can see all these indices. Best index was the Qs that had 32% breadth. Worst was the Dow Jones, which had 20% breadth. And if we go to our FinViz heat map, You can see there were some areas of strength, but these were all the most defensive areas of the market. And then a lot of the other areas got walloped. So early in the day, I was saying, I don't think we're going to make much progress here with Nvidia down and Amazon down. And sure enough, the whole market just kind of like weakened up. Semis really got weak. A lot of these different areas of the market, just straight up barbecued. And it is what it is. Sectors here, you can see technology is still at the top in terms of sector momentum, but you can see that one was down. Semiconductors were down huge. Gold miners, boom, got hit. Cannabis got hit. Everything got hit, really. So, yeah, tough day in the markets. Chinese internets got hit. So, yeah, under the surface, I know there's a lot of players out there that are really feeling pain. And, I never like to see anybody out there that's like drawing down or really struggling or anything like that. I know this has been a very frustrating period in the market. And that's why for me, like exercising the sit out power and just holding a little bit more of a cash balance, definitely helps me mentally. The worst was before I closed out a bunch of my trades. I was like, man, I have a lot of these and I feel like the market's starting to turn south. You sort of get a little stressed out. Now it feels a lot better. But yeah, I hope everyone, just gets to relax into the weekend and comes into next week fresh. Style factors, you can see we had the international momentum was down 1.39%. We had momentum down 1.12%. High beta, look at this. So this, I've heard this narrative also, like, oh my gosh, the Delta variant's way worse than everyone thought, like all that stuff, whatever. Maybe that's just kind of being priced in by the market, but this is a huge, let me see this high beta ETF, SPHB. Let's see what that looks like. Yes, this doesn't look pretty. Look at this. This thing's been meandering for about, not that long, actually, like 2 months. But you can see it's breaking down to the bottom end of that range. We took out a VPOC down here and just kept moving lower. So yeah, these high beta stocks are not looking so good. And we'll go on to my trades for today. So let's take a look here. I had one options trade that expired. And this one was my Airbnb trade. I had traded this one a couple times to the long side. I had success in all those other attempts, and I just kept rolling the trade out and rolling it out. And this one, just didn't work this time. So this one, I closed out 10% of it for a nice winner. The remaining 90% of it, this was a 150 by 160 call spread. I was trying to stick with this one, and I was like, it keeps bouncing back and forth, trading in a range, whatever. And I think this one was a good learning experience for me, because for this one, I had a couple of chances to take it off for actually like a small winner. So I think it was like back here where on almost all of these pushes higher, I could have taken this off for maybe like, $4 or $4.20, something like that. We actually had this really nice push. This happened while I was on vacation, so I wasn't really like as quick on the draw in terms of taking a target, but that's really my own fault. And then especially with the Delta variant, like nervousness, hesitation in the market, I noticed these travel stocks just started to get, really like whipped around. So with this one, I think I held on a little bit too long. I should have cut the cord a bit faster, but that's, learning experience for me into this OpEx. So yeah, that one expired. Once it expires, though, it's upward and onward for me. I take my learning lesson, and what's good for me is like I write it down here, and I just try to really be honest with myself. So I put will be better on taking profits with call spreads in the future. Nice learning lesson. So that's what it is. And then the one trade that I put on today, I got long some Nvidia common stock, and I put it on towards the lows of the day for 727 spot 885. And Nvidia is one I've been watching pretty much the entire day. And I'll pull it up over here. So on my charts, especially on TradingView, I really like this layout I have where I just have a lot of indicators and tools at my disposal. So one of them is this bridge bands indicator. And this was one I found online. I really like this one. So I'll just pop it on every once in a while. And it just gives you a good indication of, it's almost like a Bollinger Band, except the formula is a little bit different as to whether something is, overbought, oversold, etc. And I can see that Nvidia is now short-term oversold. It popped through the lower end of this band. Now, Nvidia, I look at these sales numbers. The sales growth has been absolutely fantastic. The EPS growth has been absolutely fantastic. This was the strongest stock in the market. You can see we had these yellow dots here. We had institutional accumulation. And now, in the heat of this sell-off, this thing really is losing its legs and, really getting punished by the market. You can see these extended range candles. Now, I figured, let me see if I can play this for a little bounce trade. Just oversold bounce, nothing too crazy. And I really think, nothing's changed with Nvidia. This is still literally the premier asset. And I'm starting to see things like this as well with the CNN Fear and Greed Index. So I'm actually seeing a couple of indications where, I actually do like the risk reward a little bit better here than I did before. You can see the CNN Fear and Greed Index is at a 23. So, sure enough, I'm buying Nvidia down here, and so many people, I posted it just for fun, really. I bought some Nvidia, pray for me. And, so many people are like, why would you buy Nvidia? It's down. And it's just where are you going to buy Nvidia? Are you going to buy it up here, or are you going to buy it down here? You know what I mean? Yeah, you could definitely have been trading it up here. Now, I know some people, they'll just go, okay, as soon as it breaks, I'm done. But this, am I worried that Nvidia is going to go down to zero? Heck no. No way. Nvidia is literally the best company in the market right now. So yeah, with this one, I'm trading it, for an oversold bounce. And, for me, I just have my stop out point set up, whatever. If I take the stop, I take the stop. But I do think there's this cognitive dissonance with traders where they think that if a stock's down, there's more risk in trading it than if it's up here. If I were to have said oh, I got long Nvidia up here, people would be like, oh yeah, Nvidia's awesome. Why not get long? Whatever. But to get long when it's much cheaper than it's been for the past, 15 candles, that's suddenly a no-no. But yeah, you can see it's tagging the lower Bollinger Band here as well. This thing could make its way to the 50-day over time, but I just think the odds are low that it happens literally in a straight line. And, tomorrow or Monday is just another extended range down candle that brings us straight down to 700. So that's really the thesis for this little bounce trade. But yeah, we'll have to see what happens. This also is another indication that when the leading stock is doing this overall for the market, that's a really tough environment. But now, I stepped in trying to play it for an oversold bounce here. And then let's take a quick look at our options order flow and see what we had going on today. So we will look at, this is pretty cool doing this, today's combined flows. This shows you throughout the day, what was getting the most flow. I like how they do the visual like this. Let me turn it into a race. This is funny. Amazon keeps getting so much call flow. And this thing, I traded Amazon's breakout, and I closed out of my Amazon 2 or 3 trading days ago for a winner just because the market looked like it was getting weak. And it worked out where, sure enough, Amazon's retracing all of that. Yeah, so Amazon, is pulling back to the 20-day. This has had a lot of just these ugly red candles. And essentially the breakout was just an epic fail. So with Amazon, it's when is this thing actually going to do it already? Look at this. almost a full-on bearish engulfing candle of the breakout. So I still think Amazon could have a nice move in the future. I'm actually eyeing this one up as it pulls back to the 20-day. So we will see what I find interesting and what could actually hinder it is that, so this was the breakout candle. I purchased Amazon like right as it was moving through this pivot. I caught it right at like 35.60 or something like that. It moved through, and from really this day on, they've been spamming the Amazon calls. It's ridiculous. Throughout the entire day, it's just Amazon calls, Amazon calls, Amazon calls. And they've been doing it day in and day out and day in and day out. And Amazon, ever since that first breakout day, really hasn't made any progress. It was bouncing around for a couple days. And then when the market got weak, then it really just kind of fell apart here. But it makes me wonder, like, all this call premium that's being bought, like, these people must just be like, what the heck's going on? But they're probably a lot of them are much longer term. Like, this is just, it's been like 5 days for Amazon, making that move. So let's see, we'll go to our Tradescape here. Yeah, a ton of SPX volume. A lot of these are calls, actually, going out into the future. And then let's see some of these individual names. So we have Amazon, of course. Tesla, the VIX here, Apple, Nvidia. Let's see what they did for Nvidia. This is pretty much a mixed bag. Of course, now everyone's buying the puts now that it's like trading literally in like oversold conditions. That's cool. That's like always the case. It's actually pretty funny. But let's see. Yeah, I would say these are like the usual suspects. Nothing too crazy. Let's see what they had for the VIX. Yeah, players buying VIX calls. So that's not a good sign either. Yeah, they're buying the 40 strike calls, 20. We need to buckle up. Make sure you got that cash balance, team. We'll see, because, yeah, at this point we don't really know. So I'll leave off on this, where we already know the small caps are really falling off. Oh, yeah, and real quick, I did some test buys the other day, and they held up okay. So I bought DocN, DigitalOcean. This one was up 2.26%. So that was another reason why I took on Nvidia, because the test buy that I put on was profitable today. So I don't think I would have been going for Nvidia if this hadn't happened. Like if I took a stop on this one, and then I took a nibble on Shopify. And Shopify, this one really struggled as well, but it was up 0.08%. So what I think really is, if you can identify some of the leaders, like what are the best companies in the market right now, and you sort of have a feel for that, then it's like you sort of know, like institutions, they're trying to buy Shopify even though the market's super weak. I mean, of course, if the market just continues to plunge, Shopify will go down with it, no doubt. But to me, it's like, yeah, Shopify, like it's that company that everybody wants to own. So like you can see, even on a rough day like today in today's tape, people were taking that opportunity to buy some. Shopify was flat. So yeah, this was the other one that I'm like, okay, I'm doing these test buys on these oversold stocks. It's not like they're blowing up or anything. So we'll have to see. But yeah, to close off today's video, I'm going to try to make these shorter. They've been a bit longer since the market has been really volatile. But to close out, we have the S&P 500, not even touching that 20-day yet. A lot of times when it tags that 20-day, it not only tags it, but it undercuts it, because there's a lot of players that put their stop order just below the 20-day. So this thing, it'll come below it, and then it'll really flush below it, and it'll spook everyone out, and then a lot of times it just stick saves at the 20. But keep in mind, we got this 50 down here as well, and we have this monthly value which we're still really high above. So in terms of risk reward, I think sentiment's starting to get more bearish. Maybe we get some sort of bounce or whatever, but we have to just be cognizant that, like, if your portfolio is going to be like screaming bloody murder if we hit this 20-day, then some changes need to be made, I would say. If it's going to be screaming bloody murder if we start going for this monthly value area, then yeah, I think some changes need to be made. But that being said, I know this was a challenging week for everyone trading the market, so hopefully you get some time away from the screens. I'll be putting out, as usual, my weekend market analysis video. I'll be putting on my weekend watch list, so stay tuned for those if you are a Pristine Capital member. Hope you all have an awesome weekend.